ICT's strongest algorithmic model that has a 85 to 185 to 90% win rate. And why is it called the strongest algorithmic model? Because what is two most important thing in the market? Taking out liquidity and displacement. Why are those two so important while you're trading, while you're trying to look for a trade? Because those actually give you the move that you actually want. That's it. The market just wants that market. The market actually wants to move down there. In today's video, we're gonna be talking about unicorn model. How is it formed? What are the steps to it? First is very clear, right? Now the first step is always a seek and destroy, right? So market, not I don't call it seek and destroy, but market needs to do a stop rate. So stop rate, right? Market needs to take some sort of liquidity. So we got a perfect example of today, which this unfortunately I did not take. My pathology was not in check, right? So I was like, oh, I'm looking for a daily or am I looking for a 4 hour? The 4 hours gave me a perfect example of the unicorn model that went in my favor, but the daily didn't, right? The daily John Liquidity was bullish, the 4 hour wasn't, right? Just my pathology was not in check, so I was kind of crumbled, and I'm trying my best right now to just stick to what I got. Just the 1 hour, the rules I have right now, and everything I have to it. It's really perfect. Just gotta follow it, right? And what let's just go over unicorn. Why is it so powerful? As I said, displacement and stop rates, taking out liquidity, meaning taking out liquidity, bringing new market taking out liquidity and bringing new liquidity to the market. Because that's a good thing. And the displacement is the second most important thing, because without displacement, will the market actually move your way? No, right? It's very low chances of actually going your way. In the long term is what matters the most, because we are traders, right? We don't think short term, we think long term, right? So now let's go over the first step. Take out liquidity. And actually we could go back to chart play, right? So we go back to before 2 o'clock, where we could see the 4 hour bots and everything, right? Before the next 4 hour candle forms, right? So first of all, we start our bias. So all these models are nothing without a context, right? Without the actual context, these models are worth nothing. They will have higher chances of actually taking you out rather than going your way, right? So this unicorn model might happen 8 times a day. All of those 8 trades might be a loss, right? So you would be really careful when you trade these. You gotta have context, right? You gotta be really contextable. You gotta know, why does this unicorn model have to work? Why does it have the reason? Not have 100% conviction, but why does it have 80 to 90% chance of it going your favor? Why? Because market in the 4 hour time frame, in this example of today's example, the 4 hour drawn liquid was bearish. Market took what? Market tested daily fair value gap, right? Now, let's just say we primarily focus on 4 hours. That's what I'm focusing on, just primarily 4 hour, right? 4 hour drawn liquid was already bearish, right? Now market tests this. Now this gives me even more bearish movement, right? So if market tests a 4 hour fair value gap, market moved out of what? External to internal. Market just touched a internal. What's the next one? External, right? So I don't really care about this internal external stuff. I just care about market taking out liquidity and fair value. So market, I don't care, right? Because market go from fair value to fair value gaps. Could go from liquidity to liquidity, right? From box to chest out, right? Easily, right? Without having touching any fair value gaps or box fair value gaps, right? And so we already have our first bias. 4 hour John liquidity is bearish. 4 hour box is bearish. This gives us even more confidence that this might play out more in our direction, right? And with that, go to the hourly time frame. Now we're looking for entries to this unicorn model, right? We can't take it out of blindly. We gotta have a context, right? So now we gotta go in a chart, be like, okay, what is there in a chart that we can mark out and use as our advantage to get into the trade? Now what we're gonna do, let price play out a little bit. This is right before 2 o'clock. I'm waiting for our candle. The 2 o'clock candle closed bearish, so I'm still looking for hourly confidence. I don't have no context. I can't take out of this fair value gap. Why can't I take out of the fair value gap? Very, very simple. That got hit before market session. So I'll be like, okay, I can't take that because it got touched before the market kill zone, right? Kill zone where we take more trades If a building block gets touched before a kill zone, even a minute before, I won't be so looking to take a trade. I'm waiting. Patience plays off, right? And during this time, so since our forward box was bearish, right? Since our forward drone liquidity is bearish, our forward box is bearish. Our 1 hour box is actually bullish. So we got to be careful with our unicorn model. We can't look for a 5-minute unicorn model because the hourly is going against the 4 hour bias and the forward drone liquidity. So we're looking for a 15-minute instead of a 5-minute, because 15-minute makes more sense, right? Now there's less manipulation, there's less, bad price action, right? More smooth price action, which is better. So now we're looking for a 15-minute unicorn model instead of a hourly, right? So now what we're gonna do is instead of a 5-minute, right? Unicorn model. So now we're just waiting for a building block to get created. What do we got here? A basket liquidity right over here. Now we're just waiting for this basket liquidity to get swept or no trades, right? And every time the hourly time frame is against the higher time frame. So I only use the 4 hour bias and the 4 hour drone liquidity as my main, bias. So whatever the 4 hour drone liquidity is, if the 4 hour liquidity is bullish, I'm going bullish. Even the 4 hour bias is bearish, I'm still gonna go bullish, right? I might have no trades. The trade might not, the trade might take longer to take profit, or be more manipulative. But I'm always following the drone liquidity rule. If market go take out this liquidity from sell side, I'm to go into another fair value gap, or I'm going for another box of liquidity, right? So I'm basically going to go out of that, but vice versa, right? So during this time, our time frame is bullish, so I'm looking to be more of a less risky place. So I'm not going to look at a 5-minute because 5 minutes is way too messy. So I'm looking at the 15-minute time frame, right? Now we go to 15-minute. I'm looking for the 15-minute time frame to start giving me some stop rate. So we got a box of liquidity over here, which already have one over here, but this got invalidated. You could see market pushed down, took out another one actually. Now this one I don't care about. I'm not looking for a displacement below here because market just took out another box of liquidity. So we got a step 1 is take out liquidity from the market, stop rate, right? Step 2, looking for a displacement, and with that step 2, I'm looking for step 2. Let's not get ahead of ourselves. Go patiently and accordingly, right? So step 2 is what we're looking for, is the displacement. We get a displacement here. So we got a displacement. It failed, right? So we're still looking for the step 2 to get created. But with the step 2, we're looking for the fair value gap to be created, right? That fair value gap has to overlap with the breakup block. If it does not overlap with the breakup block, it's not a unicorn model. So let's go play price. Did it create a fair value gap here? You can set fair value gap here. So now that's a unicorn model. Now be careful of this, right? You can see right over here, market. What does the market do over here? Create another fair value gap. People are gonna say, yo, people are gonna usually take short out of here. No, we're only taking shorts out of the ones that overlap with the breakup block. If they're not overlapping, we're not taking that one because we're gonna have a worse entry, and right, we don't want to do that, right? So now we're just patiently waiting for this breakup block or fair value to get touched. Whatever the first one to get touched, the first recent one to get touched. I'm not being greedy. I'm not trying to chase a better RR or anything. So now what I'm waiting for is go to the 1-minute chart. I'm not 5 minute, but whatever time it gets touched, because during this replay, so market just moves, what we call it, moves every 15. They move the 15-minute candle. So now let's set the price. Let it go to the breakup block or auto block, breakup block or fair value gap. Now touch the auto fair value gap and the breakup block. So now for the sell stop placement, we got step 1, which is take out liquidity. Step 2, which is displacement. Step 3, create an overlapping fair value gap with the breakup block. So we got all the steps. This is now unicorn model. Now, a lot of people might question like, why do we need a? So people have a question like, where do we put our sell stop, right? Where do we put our sell stop and breakup block? I see myself getting stopped out at breakup block when I put my sell stop right above the breakup block, right? So the way you could do your sell stop on breakup blocks is very, very easy and very simple. You look for breakup block sell stops. I usually always wait for a confirmation. So once I see a move out of this, breakup block on a 5-minute time frame is all I care about. 1 minute. And once I see a move out of this and I get an entry, which for my entry, I don't put limit orders. I do market execution. So this time I would have not entered nowhere here. Yes, you would have thought to get a better execution, but sometimes market does go over here. Never give you that entry in a 1-minute time frame. Market just goes up, take out liquidity. People who did limit order were getting stopped out, right? So now what we're gonna do is For our sell stops are going to be very simple. It could be above the breakout block. For the breakout block, the 5-minute candle has to have a reaction out of the breakout block. So there's a bearish breakout block. I'm looking for the market to close below the bearish breakout block with the body to close below it. Now the wick, right? With the body, right? So now the body closed below it. Now look at the 1-minute chart. So all I'm looking at a 1-minute chart is I'm looking for two things, right? I'm looking for this fair value to get inversed, or I'm looking for a breakout structure. So we have these two that we could do. Then that right there, if our fair value gets inversed, that can count as a breakout structure for me. That's what I count it as, because that tells me the price wants to move down. Now we got inversion. Now we're just waiting for a 1-minute building block. PDRA. Now we gotta move back down. Never touched. We broke structure down, but guess what? Did we touch any building block? No. So we're still waiting. Now looking to short from anything here. I'm looking short from the fair value gap. Anything here. This candle closed bullish. We have to let the candle close. If the candle is not closed, we cannot enter. Even if 1 second before, you might get a worse entry, but it's about the long term. So long term, that keeps you safe. Because market from here, if we just put a limit order, market might just go up here without getting a bearish reaction. Did the market actually respect these building blocks? Probably not. So we're looking for that bearish reaction. We're not looking for that bullish reaction, right? So now we just play with price one more time. Market closed. Boom. Now what happened here is now we could get in a trade. Now we're putting our sell stop right above the breakout block. Why? Because we got a bearish reaction. Now what we're gonna do is do the trajectory. So now since we're using a 15-minute unicorn model, not a 5-minute, we're gonna go to the 15-minute time frame and do a projection over there, right? So this is a standard deviation project, right? Projection. So now what we got over here was sweep of liquidity. Then so I got a topic over here, right? So what we got over here was that how do we do our standard deviation projection, right? What we're gonna do is that the high, this standard deviation works really well with the unicorn model. So use the standard deviation, because what does the unicorn model have? Take out liquidity. And what does the projection, the standard deviation require? A super liquidity. Then we're looking for this manipulation leg, which is this over here. Now we just draw from here to the low. Now once we look at displacement, now we could draw it out. Now this will tell us a better efficient take profit. Very simple, right? Very simple. So yeah, we just put it from there, from the leg up that took out liquidity, boom, to the leg down, to the sensor liquidity, right? Now we put it from here. We can make another video about this, but now to the people who already know, I'm gonna talk about it, right? I'm gonna make a video about it tomorrow, but right over here, this 2.5 to 2.5 is the most important one. That 4.0, which I don't like using. Why I don't like using it? All of the market did eventually hit all of them, right? The market went up below it, hit all of them, hit the 4-point rejection shot over here as well. We draw the 4-1. Draw the wrong 4. I drew the wrong one. Fourth one's over here. Market went below the fourth one as well. Why did I not draw it? What I find out is about the 4-1 is I always, in the long term, you evolve greed. Like, oh, okay, I want to go for this. The 4-1 that gives me better aura, gives me better, more money, right? Which we don't want to have. We just want to get what the market gives us. We don't want to be greedy. So this right here, look, this 2.2 is closer to the sensor liquidity, and this 2.5 was closer to this. So I was taking this out. So TP1 and the first one was closer to sensor liquidity. So I was using this TP1, TP2, TP3. That's simple it. This TP4 got hit as well. But guess what? Long term, I don't want to be greedy, right? Because greedy, we want to have our emotion in check. This is the perfect example of unicorn model. And first one, I didn't take the trade. This was at 3.2 RR. Why did I take this trade? As I said, man, myself was wrong. But we're back. We're back stronger than ever. We are going to use the 4-hour buys for the liquidity rule, not the daily, because daily I don't want to use the daily, so I'm just gonna stick to the 4-hour. And the reason I'm using the 4-hour, not daily, because although I'm a day trader, right? I don't use the daily. Why? Because I'm using from session to session. I'm not taking a whole daily move. I'm taking a 1, 2, 3-hour move, right? So this is the perfect example of why that ICT's unicorn model, the strongest algorithm model, is all about. super liquidity, positive displacement, and one more important thing is has a fair value gap. Sometimes you won't have a fair value gap for the, you know, for some other models, but for this model, it has to have a fair value gap. What a fair value gap won't be real good, right? But that's why it's the strongest model out there, right? 80 to 90% win rate. This had a whole concept of why it should be working out. What was the context? Super liquidity in the early time frame. For the case bearish. 4 bots is bearish. We're looking to go for these lows. What does the market do? Pump down there, right? So this is it. Thank you for watching. A perfect example. Then from now on, let's focus more on, I'm just saying this to myself now at this point, that make sure you guys join my Discord. If you guys are new to the family, join the like, subscribe, comment, whatever you guys need. If you guys need a video about any, if you guys got any video suggestions, let me know. I'll make a video about it if it sounds good to me. But make sure you join the Discord. Make sure you guys join the Discord because we have free one-on-one sessions, free signals from a professor, Professor Shane, 7 years experience, 3% probability, and it's all about practice action, right? And yeah, thank you for watching. Make sure you join Discord. And I just want to say that let's get to cooking, man. Today, missed a trade. It is what it is. Patience pays off. We learned this is a lesson. This is a lesson learned rather than being FOMOing this like, oh, I missed this trade. Now let me go get a look for another trade. No. But thank you for watching. And let's get to it. This is how and why. This is a showcase of Unicorn Model with, you know what I mean? With a showcase. Why is it so strong? The context behind the Unicorn Model. Why does the Unicorn Model have to work out? Everything was explained in the video. Thank you for watching. And see you guys later. I forgot to lose.